While the market obsesses over NVIDIA and AMD, one company is quietly powering the backbone of the AI revolution, and you might not even know its name. Ever heard of Supermicrocomputer? Ticker symbol, SMCI. This isn't some flashy chip designer. SMCI is a high-performance server and computing hardware company that's been flying under the radar for years. But in the age of artificial intelligence, cloud computing, and hyperscale data centers, it's now emerging as one of the most important infrastructure plays in the tech sector. So here's the question. Could SMCI be the best AI stock that no one's paying attention to? Before we dive into why this company might deserve a front-row seat in your portfolio, do us a quick favor. Hit that like button, subscribe to Stocks Telegraph, and drop a comment below. Have you been watching SMCI? Or is this your first look at this under-the-radar powerhouse? Supermicrocomputer, or SMCI, isn't just another server manufacturer. It's a pivotal player in the AI infrastructure space. SMCI designs and builds high-performance, energy-efficient servers built to handle the intense computing demands of AI, cloud, and hyperscale data centers. Their modular architecture allows for rapid deployment and customized solutions, making them a favorite among enterprises looking to scale quickly. SMCI stands out for its rack-scale integration capabilities, delivering fully configured plug-and-play server racks that improve deployment times and energy efficiency. These systems are also optimized for advanced cooling, which is becoming essential as AI workloads grow increasingly power-hungry. In terms of partnerships, SMCI works closely with the likes of NVIDIA, AMD, and Intel, ensuring its hardware supports the most cutting-edge chips for AI training and inference. This puts it at the center of one of the most transformative shifts in computing. What separates SMCI from legacy competitors like Dell or HPE is its speed and flexibility. Its building block solutions platform allows it to quickly integrate the latest chipsets and technologies into server configurations, often beating bigger players to market. This speed to market, coupled with its ability to tailor server configurations for specific workloads, gives SMCI a key advantage as enterprise and cloud players scramble to build infrastructure for generative AI and other complex models. Its systems are modular, energy efficient, and adaptable to fast-changing demands. That combination has allowed it to carve out a leadership role without the bloated overhead or bureaucracy of older tech incumbents. Fiscal 2024 was a breakout year. SMCI posted $14.94 billion in revenue, more than doubling its 2023 sales, and delivered $1.21 billion in net income. Earnings per share hit $20.09, up from $11.43 the previous year. The fourth quarter alone saw revenue of $5.31 billion and EPS of $5.51. These are massive numbers for a company that still feels overlooked. But the ride hasn't been smooth. SMCI's stock hit a high of $122.90 in early 2024 before dropping sharply. As of April 2025, it trades around $35, down dramatically, but still up substantially over a multi-year period. With $1.4 billion in cash and a manageable debt-to-equity ratio of 30.6%, the balance sheet remains solid, giving SMCI room to continue investing in growth. As large language models, generative AI, and autonomous systems scale, the demand for compute is exploding. Market forecasts project the AI server market to grow from $142 billion in 2024 to over $830 billion by 2030. That's where SMCI comes in. Its servers are purpose-built for GPU and AI workloads and are already used by hyperscalers and enterprises alike. Whether it's NVIDIA's latest H100 or AMD's MI300 chips, SMCI racks are often the go-to for deployment. Cloud providers like AWS, Azure, and Google Cloud don't always build all their hardware in-house. They often lean on companies like SMCI for rack-level, scalable deployments. At the same time, as AI training costs climb and power consumption becomes a bottleneck, SMCI's energy-efficient designs will only become more valuable. This is a key differentiator as the world wakes up to the energy demands of the AI era. No stock is without its challenges, and SMCI is no exception. Competition is heating up. Dell, HPE, and even new entrants like Lenovo are scaling up their AI server efforts. These companies have massive sales teams and entrenched customer bases, which could pressure SMCI on pricing. Supply chain risks also loom large. If NVIDIA or AMD chips get delayed or face geopolitical barriers, SMCI's ability to fulfill orders takes a hit. Then there's the volatility. After skyrocketing to $122 in 2024, the stock crashed back under $40 in just a few months. That kind of whiplash makes it hard for some investors to stomach. And finally, there are governance questions. SMCI's longtime auditor resigned in 2024, and an investigation was launched into the company's accounting practices. No formal wrongdoing has been proven, but it's a cloud that investors can't ignore. As of late April 2025, SMCI trades around $35.81, up nearly 9% in a single session, but still well off its highs. The stock is trading below both its 50-day and 200-day moving averages, suggesting a neutral to bearish setup in the short term. The RSI sits around 46, indicating the stock isn't overbought or oversold. MACD momentum remains weak, but a potential rebound could be brewing if fundamentals hold. Retail traders are divided. Reddit's Ars SMCI discussion is filled with both believers and skeptics, and analysts are split too. The average price target across firms is around $49.52. Rosenblatt recently reiterated a buy with a $60 target, while Goldman Sachs remains cautious with a sell rating. Supermicrocomputer has emerged as a pivotal player in the AI infrastructure sector, offering high-performance, energy-efficient servers tailored for AI workloads. Its modular designs and rapid deployment capabilities have positioned it favorably amidst the growing demand for AI-optimized hardware. The company's partnerships with leading chipmakers like NVIDIA, Intel, and AMD further bolster its market position. Financially, SMCI has demonstrated robust growth, with revenue increasing from $3.5 billion in 2022 to $7.1 billion in 2023. The company has set an ambitious revenue target of $40 billion for fiscal 2026, significantly higher than analysts' projections of $29.2 billion. This optimism is underpinned by the anticipated adoption of its direct liquid cooling technology, expected to be implemented in over 30% of new data centers within the next year. However, SMCI faces challenges that warrant consideration. The company operates in a highly competitive landscape, contending with established players like Dell and Hewlett-Packard Enterprise. Goldman Sachs has expressed concerns over SMCI's competitive edge, citing potential margin pressures and reduced product differentiation. Additionally, past accounting issues have raised questions about its governance practices. In conclusion, SMCI presents a compelling opportunity for investors seeking exposure to the AI infrastructure boom. Its innovative solutions and strategic partnerships position it well for future growth. However, potential investors should weigh these prospects against the competitive pressures and past governance concerns. So, what's your SMCI play? Are you buying into the breakout, waiting on a pullback, or sticking with more familiar AI giants like NVIDIA or AMD? We want to hear from you. Drop your full SMCI strategy in the comments. And if you're into sharp, data-driven investing breakdowns and uncovering hidden tech gems before they hit the mainstream, be sure to subscribe to Stocks Telegraph, like this video, and ring that bell so you never miss a deep dive. Thanks for watching, and we'll see you in the next one.